Hey everyone, welcome back to the channel. In today's video, I'll be discussing my current analysis on the Forex currency pair GBPJPY and breaking it down using Confluence trading to obtain a plan for it for the upcoming trading week. So starting on the daily time frame, the pound has been in a very massive uptrend. If we go on the weekly time frame, you'll see a clear perspective. Up until about May 2020 till now, the pound has been surging, skyrocketing in value, bringing the overall value of GBPJPY to immense lengths. Up until now. But things are starting to get very interesting. If we look on the past 3 weeks, there has been a massive plummeting surge in sellers to the downside, with the pound in recent time, in the past couple weeks, devaluing, with the sellers starting to get in control. On the daily time frame, that is where I plotted on my specific zones in the market, key levels. So I started with one with this massive wick here that has yet to be broken from March 24th, 2021 of last year up until now. So this is a plotted level that will remain significant if price comes down here. Jumping down to the 4-hour time frame, we are seeing a massive downtrend at the very current moment, characterized by our high point, a lower high, and a lower high. And so right now, from this point all the way from down here, this massive drop actually happened on the market open of this most recent week on Sunday night. So this might have just been a trap move by sellers and buyers to trap current positions, obtain liquidity, do things that will keep the market cycle flowing. So right now we are actually seeing a retracement, a pullback, and recovery off of this swing high to swing low. So we're seeing a pullback of this large move right here. And in between here, we are also seeing multiple imbalanced areas in the market, one being right here and another imbalance right here. So what I'm going to be personally looking for is price to fill this imbalance zone and this imbalance zone, because this massive surge here, if we think about the laws of supply and demand, what keeps the market cycle rolling is equilibrium, which is where supply meets demand. And when there is a massive surge in sellers, that results in inefficient price action. So I would be looking for price to continue pulling back from here to here, this small pullback, and cover this inefficiency area and this inefficiency area. And you'll also see this will line up directly with the 50 EMA. So we're just right off the bat seeing a couple confluences build in our favor. Now, in order for me to determine how far this current pullback from here to here will go, I'm also going to add another confluence and confirmation, the Fibonacci retracement tool. So as I pull this out from this swing high down to this swing low, I'm going to be looking for price to pull into this premium area in order for me to continue selling. Because if we check back with the 4-hour time frame, or actually I'll go out to the 8-hour to give you a much clearer perspective, we are seeing on this current uptrend a market structure shift, because in between here and all of these higher low points, that was completely blown out by this surge in sellers. So right now it's a very interesting time because we are seeing a structure shift from an uptrend now to a downtrend. So it would be very wise for me to continue to look for selling options. So what I'm going to currently do right now is build confluences around this specific area. So we're going to wait till price to fill this inefficiency area, but where there's more confluences are going to be around this specific premium area to sell. So what I would be looking for is price to perhaps pull into my daily market zone right here, plotted on the daily time frame, matching that up on top of a 70.5% Fibonacci retracement level, which also is characterized in the trading game as the optimal entry point. And if we look on this axis here, where does this fall in line with? The 160 psychological level. So what I could be potentially looking for on we'll drop down to the 4-hour time frame here to get a clear perspective. We'll want to see price to continue to surge in here, perhaps break above this market zone, make a retest off of that, fill the next area right here, build our confluences in this area, and then perhaps continue downwards to the downside as well. So we'll have two specific imbalances filled. We'll have a daily market zone tapped into right here, also a nice resistance level, and perhaps a wick rejection here, right on top of our 160 psychological level. And on this downtrend here, it will be creating a new lower high point, continuing to the downside. So if we pull out our risk to reward tool, how I would be framing my trade around here is taking my profit target all the way down here. That would create potentially a 1,000 pip move. That's not ideal for a day trade, so this would be characterized as a swing trade. Stop loss will be placed just above the 78.6. But this would be a 187 pip stop loss. So let's see if we can jump down to the lower time frames and refine it down even further. So if we take this, pull it out, refine it down even more, what I'm going to be looking for is potentially a demand zone now. So on this next swing high to swing low, we can pull this out and create a demand zone now, right around here. And this is how you refine your entry points as well. I'm going to erase this. This will be my demand zone, which is also could be called an order block. And I'm going to be placing my stop loss just above this area right here. So that'll create now a 50 pip stop loss with profit targets being taken at this wick right here. We also have a specific area right here with a lot of rejection. So this could be a profit target as well. So we have our first profit target. If we're entering here, we could be taking profits right about here at this specific area of rejection, 300 pips in. Our next profit target being 574 pips in. And then our next profit target after that being down to this wick, 700 pips in profit, all the way down to the final destination of over 1,100 pips in profit. So knowing this, we have to understand that this is now going to be a swing trade because it's going to take a lot of time for the overall trade to get here. Number one, we need 2 levels of patience, price to come in here. And then when all of our confluences are built around this area, we can then place our trade and pull down here. Now, another area you could possibly take a look at is this supply zone as well, right down here. So we have 2 options. Either we can wait for it to come into this area, or we can also build our confluences on this supply zone, which is also at the 61.8% level, which is also on another psychological level at 1.58. So we have 2 specific scenarios, 2 specific options to work around. This is the second scenario. Perhaps price comes in here and comes back to our low. So scenario 1 at the 61.8, that's where we built our first confluences. And if it were to break above that, blow out and breach this supply zone and our confluences here, which are also layered on a daily level. And it would also support the fact that that would be another lower high point. So we have 2 areas to work around. We're going to give it some time. This is where I'm going to be specifically placing my personal trades on GBPJPY, continuing the downtrend, and we'll see how it plays out. With all that being said, here's our first 2 scenarios here for GBPJPY. It's going to be a continuation in the downtrend, looking for areas around these 2 specific areas in Confluence. And with all that being said, if you received any value from this video on my process and my personal approach to the markets, feel free to give it a like, subscribe for future content, and stay tuned for more videos. Take care.